Okay, let's go to FX now. Alright, so let me just talk about Euro Yen first, because I remember the last webinar I was talking about a Euro Yen setup that looks decent. So I think the reason why most of the Euro pairs you see are shooting up quite strongly is because of Draghi's speech, I think an hour ago, which is very interesting because he was saying that the ECB will need to be gradual when adjusting policy parameters, right? Which means that they should not just remove QE or quantitative easing totally, which and the Euro bulls actually came to the picture because of that, which is quite. I mean, if you look at Economics 101, the reaction is actually opposite, right? Because if you slow down quantitative easing, it's actually weak. That means you want more quantitative easing, right? It's actually weak for the currency. But I'm not surprised these days. These days, the fundamentals and the technicals and the sentiments are always opposite. So I trust the charts more than anything else. So it is what it is. Euro really strong. So if you look at most of the yen pairs, right, I would say Euro Yen seems to be the strongest pair out there. All right, so if you're looking for a trending market, look at Euro Yen. Nice bullish trend. Okay, so Peter, back to your question of momentum, right? So you can see, for example, here, you can see that the momentum is gaining already. Okay, why? Because again, if you use price action, right? Let me just remember this rectangle I drew last week. Never mind, it's okay. I will talk about the setup that I mentioned last week again. But let me just delete this box that I drew. Okay, but last week I was mentioning this little consolidation setup. My last webinar was 13 June. 13 June was somewhere here. We were near support, all right? And I mentioned that this is a very strong support and might make a push to the previous resistance of the channel consolidation at around 125. Okay, we did that, and now we've broken new high. All right, so price action tells me that a new high has been broken, especially the daily candle closes like that. It looks very, very bullish. Okay, and if you look at the 4-hour chart, all right, you can see that it broke off from this consolidation as well. So price action tells me that all the charts are bullish. All right, higher high, higher lows, and it's very, very clear higher high. Yep. In terms of momentum, the daily chart, you can see that the momentum was very strong, did a correction, and now is gaining pace. But the daily chart momentum is not that strong yet because the moving averages are still trying to catch up the price. But if you compare the 4-hour chart and 1-hour chart, momentum is very strong because of how steep it is. Okay, that's why it is looking bullish for Euro Yen, especially when it broke the resistance of around 125.50 or so. Okay, but the reason why I start Euro Yen is because I just wanted to bring your attention to the webinar I did on the 13th of June. And for those of you, this is a classic example for those of you that I mentioned at the beginning of the webinar whereby you're a good analyst but bad trader. Okay, case in point, if you look at, just pay your attention to this level here. Okay, so you look at June 14. Okay, so the support level was anywhere close to 122.70 or so, around there. Okay, so if you look at the 4-hour chart, let me go to a short-term time frame so I can be a bit more precise. Yeah. So June 13 was somewhere here. All right. So let's say you thought that this was good support as well, and you say that okay, I enter a buy here, and my stop loss is below the previous low, or maybe you can take below this low for May. So let's say you enter a buy at 122.74, your stop loss is about 122.45, for example, or 44, 30 pips, 30 pips stop loss. Okay, so your stop loss is below this previous swing low, your buy entry was here. Okay, was it a decent trade? Yes, it is a decent trade. Okay, because you are trading off a nice 4-hour consolidation pattern of the support, stop loss, lower low. Okay, good setup, decent setup. Now, of course, we know what happened. June 15 came and actually made a lower low. Okay, so when June 15, or when was this? June 15, yeah. When June 15 came and made a lower low, okay, my thinking was that this consolidation pattern might not hold, and might make a visit down all the way to 122 or so. Okay, because it made a lower low. Look at that. The daily candle actually closed below the previous low. I was looking at around 122.70, but the candle closed below that. Okay, but you notice that immediately when the bears try to push it lower, all right, immediately, I'm not sure whether it's caused by news or just a technical setup, but immediately the bulls bought it off these levels and the thing just rallied higher and higher and higher. Okay, now for those of you who might have taken a loss based on this buy entry, okay, when it came to this setup here, you might have missed it, all right, because psychologically you were a bit sore based on this loss already. Okay, but you fail to notice that when it make a push higher, all right, if your mind was clear and you have no you're not clinging on to the previous loss, there were possible entries that you could have taken here as well as here as well as here. So notice that the market pushed up all the way, and you see how it came back to retest the previous resistance and support. I always talk about this during my webinars, all right? Testing of previous resistance and support after a bullish breakout. So this is first time tested, second time tested, third time is tested, okay? Because if you look at the June 15, right? Let's go to lower term time frame, June 15, June 15, June 15. Okay, yep, this big circle here. Okay, let me just highlight here. So this was the error that I said that if you could have taken a long entry, but you got stopped out because of this. Okay, this was a bit tricky, I admit, because the market just clearly came down and then made a total U-turn. Okay, and there were no retracements, nothing, just broke through new highs and tested this key resistance once, very slight pullback and just shot through it. Okay, but you see these three circles? These are the three possible areas that you could have gone long based on the resistance turning to support. Okay, but the main thing is that you need to be emotionally unattached to the previous loss for you to be able to take such trades. All right, and most traders, especially if they are not strong in terms of psychology side, they would have missed this trade because they were dejected by this loss here. Okay, ideally, you could have taken an entry here, but I would say this was a bit tricky. This tree with the higher probability entries to take it upside. All right, so that's Euro Yen for you. Now, right now, where we are in Euro Yen is that we are definitely bullish. And when I see a bullish market like that, a very bullish market, looking at daily 4-hour chart, 1-hour chart, all right, more often than not, you can look for entries near the 15-minute chart. Okay, because this form of breakout, right, you look at all the green candles, daily 4-hour, this is what I call a non-volatile trend. And when it comes to non-volatile trends, means the pullbacks on the higher-term time frame might take a while to come. So you can look at lower time frame to take shorter term or shallower pullbacks to the upside. And it happens a lot on the yen pairs. You notice the yen pairs, right? Let's say if you see the trend is very strong, whether it's up or down, if you try to wait for a 4-hour chart to retrace, it might take some time. And sometimes it doesn't retrace at all. It just goes higher and higher and higher or lower and lower and lower. I think for yen, most of the time it's higher and higher. All right. So for such cases, when you identify what you call a non-volatile trend, okay, the reason why I say non-volatile because it's just one direction. Okay, volatile means that there's a lot of ups and downs. So there might be a trend, but there's a lot of ups and downs. For this case, the trend is non-volatile because it's just one direction. So when it comes to non-volatile trends, you can go to lower term time frame. My preference is a 15-minute chart and try to look for lower term pullbacks for entries. Okay, just a bit of tip. Yep. Peter here breakout. Yeah, this is a breakout. Sunil, Japanese news. Yeah, it might be Japanese news. I can't really recall. Maybe this morning. I know the Euro news pushed all the Euro pairs higher. I'm not sure whether there's any Japanese news that weakened the yen substantially. This one is more of a Euro catalyst, I would say. Seed, you have a question. Is it possible to label the charts of Forex pair index? Oh, good point, Seed. I'll do it my next webinar. Yeah, Seed is asking that can I label the chart? But for this case, this is Euro Yen. Okay, Euro Yen. So just take note of that. Looking nice and bullish to the upside. Let's see. The other one that I'm looking at is you can see Pound Aussie. Okay, Pound Aussie, you can see that the daily chart is still on a downtrend. It's still on a downtrend now. What happened is that, okay, draw a line here. This is a key level to me. Okay, so daily chart is in downtrend. However, the key support is around the 16700. Here, 16700. Okay, and then if you go in the 4-hour chart, you can understand even clearer why is it the key level. So if you look at this 4-hour chart, you can see that it's forming some kind of a reverse head and shoulders. Okay, this being the head, shoulders, and shoulders. Okay, and the neckline somewhere here. Alright, so reverse head and shoulders, as the name suggests, is a reversal chart pattern. So the daily chart is coming down. Alright, if this neckline is broken, this neckline is around 1.685. If this neckline is broken, then high chance that we might push to another new high. Okay, but this is the 167 level that I'm talking about. See a support here? See a support here? So key level is 167. Now, if this 167 breaks convincingly, right? Okay, I'm not surprised that if we test the previous low, it might go even lower. Okay, but let's see whether this reverse head and shoulder pattern holds. And if it breaks the neckline, high chance we're making new highs. Okay, just take note, this is Pound Aussie. So right now, so for such charts, right, okay, you got to keep it shorter term because you got to be aware that the daily and the 4-hour chart is telling two different stories. Daily is bearish. Okay, 4 hours a bit more sideways. Alright, so as a trader, you need to be able to understand what the different time frames are doing. If the daily and 4 hours is telling the same thing, then yes, momentum is in your favor. It's a high probability trade. But if the 4-hour and daily is telling slightly different stories, then you just got to be a bit careful. It's still tradable, but you got to be a bit more careful. Okay, that's Pound Aussie for you. Let me see. The other one that caught my attention is, let's see, was it EuroCat? Yeah, EuroCat, because of this level here. Okay, so 4-hour is definitely in a consolidation pattern. Yeah, you can draw a few lines here, support and resistance. All right, but so what you can see that the 4-hour is supported by a series of higher lows here. You can see this trendline support. Right now, key level 1.49. We are at that level now. Okay, so key resistance level, let's see what happens here. If it breaks up clearly, you candle close, then high chance we're making to the next level of resistance, maybe to the 1.495 or so. All right. See this level here? 149. So it's very key level. So watch out for the level here, 149. Okay, 4-hour is a consolidation pattern. Daily, I would say it is bearish, but it's a bit sideways as well. All right, so just take note of the 149 key resistance level. All right. Peter, your question is, what if daily and 4-hour tell differently? Which one should we focus? Good question, Peter. Now, if the daily and 4-hour is telling two different things, all right, it depends on what your trade plan is. All right, so for example, let me go back to the Pound Aussie example. Yeah? Okay, so for example, the Pound Aussie, this was a key resistance level that I identified. Okay, anywhere near the 1.685 or so. All right, so now the daily, you know that is bearish. All right, but the 4-hour is sideways. Okay, which one you want to focus on depends on which level you're trading off from and your expectations in terms of what's your trade plan. Are you trading a long-term kind of trade, meaning that a couple of weeks, or are you trading an intraday or swing trade? Okay, so for example, let's say you identified that the 167 level was a key support. and let's say you took a buy entry here early today, or was it in the afternoon, okay? And your take profit level is back to the resistance. Okay, so is that a decent trade? Yes. So for this case, if you're trading the consolidation pattern, then the chart you focus on is a 4-hour chart. It's a 4-hour chart. So your 4-hour chart is the reference chart. However, if you're telling me that, hey, on Monday, when was it? Monday was a Hari Raya holiday, right? But the markets were still open. Let's say you told me that I took a short from here based on the resistance at 168.4050 or so. All right. Then if you look at the daily chart, that level is somewhere. Okay, you can see that. You see it touches here, touches here, touches here. Then you can say that, okay, I'm trading the daily trend to the downside. Then your focus might be on the daily chart. All right, and your profit target can be either the support here or maybe back to the previous low. So it really depends on trade plan, Peter. There's no hard and fast rule, but like I mentioned at the beginning or previous webinars where I cover the price action theory, right? You need to know what's your reference chart. Okay, you need to know what's your reference chart. Right, then if you are familiar enough in price action and using different time frame, you'll be able to combine the different time frame to tell the story. For example, if you took a short of the 16850 here based on resistance, and when the market came down, you're in profit, but you're also alert that 167 here, especially on the 4-hour chart. See this 167 here? Yeah. Okay, you're also alert enough that on the 4-hour chart, 167 is a key support level. So even though your trade plan is based on the daily chart and you plan to short and take profit near the previous low at 16650 or so, when you see the market reacting off the 167, okay, if you're flexible, if you're alert enough, you can actually close the trade as well. Or that's where you can combine two different time frames. But which one we'll focus on, and repeat, which time frame to focus on is number one, your trade plan, and number two, based on what phase are you trading on, whether it's consolidation or are you trading a downtrend or uptrend. Okay, I hope that answers your question. Okay, so that's pound Aussie for you. Now, you guys got any FX pairs for me to cover? Any FX pairs you want me to look at specifically? Let me just talk a bit on the usual suspects, the majors like euro dollar and pound dollar. Yeah. Now, euro dollar, right? Let me just talk about euro dollar. My euro dollar. Euro dollar has been consolidating for the longest of time. Okay. If you look at the 4-hour chart, right? Let me just zoom out for you. Okay, you can see that this is a key level, which we are going to test really soon. 11280 or so. Just zoom out a bit more. Okay, so this euro dollar. See this level here? Many touches. 11280 or so. So we'll be very keen to see what happens there. Looks like a very strong resistance level. If you look at the daily chart, okay, if I zoom out a bit more, you see this level. Anywhere between 11280 to 113. Alright, it looks like whenever it goes level, the bears push it back down. You can see how many times it touches and came back down. See this long shadow here? Touch, came down from here, false breakout here. This one was considered a breakout upside, went on next level, but you can see that this 11280 to 113. Alright, look out for that level for euro dollar. Okay. The next one to look up for pound dollar, also approaching a key level. Okay, let me just zoom in a bit more. If you look at the daily chart, oh, sorry about that. Okay, if you look at daily chart, support, resistance, be around the 128. Around the 128. It seems to me that we are consolidating some form of channel. Let me see whether there's a nice channel here. Not the nicest looking one. Something like that. Yep. So you can see that the 128 near the 128 level is horizontal resistance as well as channel trendline resistance level near the 128. Okay. Look at the 4-hour chart. You can see that it's a clearer level here. Look at how many touches, support, resistance. We are close to the level now. Alright, so there's a lot of sideways kind of trading, especially in the daily charts for the pound dollar and euro dollar. So just take note, they are both approaching key resistance levels. Alright, any other last questions before I wrap up for the evening? Alright, if there's nothing else, thank you so much for coming by webinar. If you're new to it, alright, feel free to watch the previous webinars, and especially if you like to learn more a bit of price action, how I analyze the charts, yeah, do watch the previous webinars. I think there's one webinar last month or 2 months ago whereby I covered a lot of theory as well. All right, if not, thank you so much for coming by tonight again. I'll see you in the next 2 weeks. All right, happy trading. Take care.